How's it going, everyone? It's Sam. Bitcoin is a huge opportunity, and I want to explain that and why that opportunity is closing, why people don't quite understand what's happening yet. If you don't mind, hit subscribe. There's also a link underneath the video to Margex in case you want to trade crypto. If you're bullish or bearish after this, you can go trade crypto. Now, I was driving around today, and I was just thinking about different assets people own, whether it's storage units, whether it is rental properties, stocks, crypto. And I was thinking about, first of all, why do people invest in the first place? I think a lot of people have this big misconception that they're making money, right? They're investing so that way it can grow. A lot of people don't realize a big reason why you invest, especially if you're not doing individual investing, like if you're just putting money into a retirement account, it's not actually to grow your money, it's to preserve it. We have inflation year after year. We have more money printed. If you look at the total US market cap divided by the M2 money supply, we are actually down since 1999. So in 25 years, the value of the S&P 500 has gone down against the money supply. Meaning basically there's just more money in circulation. So if you want to just have the same amount, the same percentage of M2 that you had back in 1999, you need to invest. I hope this is making sense so far, but basically the government prints a lot of money. They increase the stimulation of they stimulate the economy with increasing the money supply. And basically, if you want to just continue having some of the same purchasing power, you have to invest. A lot of people look at inflation at 2 or 3%. That doesn't necessarily tell the whole story about how much money is actually being printed. Those numbers are manipulated. So a lot of people like to look at the money supply. If you look here, back in 1997, 1998, we were right around the same amount of total market cap by M2 that we are now. Okay, so basically, again, if you want the same percentage, if you want your purchasing power to stay the same, you have to invest. If you have a lot of money in cash, you'll lose purchasing power year after year. So if we look at how the market has done, let's just look at VOO. It's a S&P 500 index fund. This only shows from 2010, but it shows over 14 years. Okay, it's gone up 4.5x, so 374%. But again, over that same time span, the M2 has grown a lot as well. So in purchasing power, you have actually gained some purchasing power right now versus M2, but you're looking at maybe 2x versus 4.5x. And if you look at other assets too, whether it's real estate or storage units, a lot of the time you'll look at a similar return to the stock market. But depending on how difficult it is to buy, like the starting amount for a house, you have to have a lot more money than going and investing in the S&P 500 index fund, right? There's a very low barrier of entry to stocks in terms of how much money you have to have or just how difficult it is to buy versus real estate. So real estate might perform a little bit better, or you get tax breaks. It's also a little bit less efficient. So if you get someone at the right time, maybe they sell their house to you at a cheaper rate than they would if it was just like a giant market like the S&P 500 or just stocks in general. So there's a little bit of different pricing there. But you look at storage units, there are people vying for these assets, especially in an economy where you need to buy assets. So they return somewhere between 10, 20%. Maybe you get more than that a specific year. But again, you're basically just trying to preserve purchasing power. You're saving your money in different currencies, if you want to think about it that way, or different stores of value, right? So you're storing it in houses or square footage, right? You're storing it in stocks, in companies. These companies make money from M2 money supply going up. Maybe they become a little bit more efficient versus the general economy, and then they go up faster than the rest of the stocks, right? So you have all these different assets that provide a similar return. The key is, again, the access to that asset and how difficult it is to either understand or get your hands on. That's where Bitcoin comes in. It's really interesting because most people don't understand it. They don't understand the asset. They think it's trash or it's really risky or that there's no real reason to hold it or there's too much risk or it's too aggressive. It changes price too much. They're all different reasons why people don't like Bitcoin. But for those people that understand it, like probably you and me, right? The people that watch this channel every day, we realize that it has value. We realize, okay, maybe it should be 1% of global wealth. Maybe it needs to be efficiently priced like the rest of these assets. And instead of going up 100% a year, eventually it'll go up 10 or 20%. The major difference between Bitcoin and these other assets up until this point is a lot of large money couldn't come in and buy Bitcoin. When you think about the pricing structure of Bitcoin and on a continuum from stocks to real estate, stocks being, hey, all you have to do is get an account. You can put in $10 and you can buy a piece. It's very easy. It's not difficult. You don't have to go through a bunch of hoops. You don't have to pay fees. You don't have to have $50,000 to start. Bitcoin's basically that, right? It's very easy to set up now. Go to your local exchange and sign up. Put money on the platform. It's the same as stocks, really. Okay. There was a hurdle there for a while for institutions where they couldn't really buy it because there wasn't regulatory structure behind it, or they hadn't really discussed what they thought about Bitcoin from the SEC standpoint or whatever local government you have. Now it's a lot more obvious. It's much easier to buy for institutions because it's an easier asset to hold in custody. You can buy it through a custodian like BlackRock or Fidelity. So now this barrier of entry is gone. Okay? So we have now billions of people that can buy it. We have institutions that can buy it and start pushing it to people because some people just don't want to buy an asset themselves. They have financial advisors for that kind of thing. They're focused on their job. So now we have financial advisors that can buy it. So it basically just unlocked 90% of the world, or 90% of the investable world, to be able to start buying Bitcoin. Okay, this is really interesting because when you look at other assets, as we've said before, if something goes up in value, usually they make more supply of it. Okay, so if all of a sudden real estate is doing really well in a certain area and it's outperforming, like you're getting 20% returns, appreciation's crazy, there's some kind of mismatch in value versus the price, usually people get wind of that and start buying up real estate there. They start building there. Okay, so supply changes to meet demand and supply changes to meet returns. Okay, same thing with stocks. If stocks do really well, if companies are crushing it, well, people will keep on investing in the stock market as opposed to going and trying to figure out some other way of investing, real estate, or maybe they'll just spend more time on the stock market in general. Like in 2020, a lot of people started funneling more and more money into the stock market, started funneling more and more time because it seemed like there was a bigger opportunity there. And if an individual company gets valued really high, well, they start issuing more shares. So that dilutes current shareholders. And then again, the supply meets the demand. Bitcoin isn't that way. When these 6 billion new people can start buying Bitcoin, because now there are financial instruments to do that, and it's all on the up and up, there's no change in the Bitcoin supply. The demand increases, but just a wave of money trying to buy a fixed amount of Bitcoin. Again, this is interesting because eventually, if we want to get to the point where Bitcoin appreciates at 10% a year or 12%, if it's actually structured like a lot of the other assets out there, and it has proper allocation from hedge funds, from institutions, from pensions, if people use it like they use gold or bonds or other financial instruments, it's going to get a lot bigger, right? I mean, you can be a billionaire today and move Bitcoin's price by a few $1,000s, whether you buy or sell or long or short. That's not the case with other assets. Like Elon Musk can't cause a crash in housing from fire selling a house, right? That's not how it works. Same thing with stocks. Maybe you can affect with your viewpoints or what you're saying about the economy, but you're affecting the price. You're not really affecting the outcome, and it's more short term. Also, you might be able to affect your one company. So if Elon Musk went and sold some stock, he could probably send down Tesla's price, but he's not going to send down a lot of other assets as well. Compare that to Bitcoin. Bitcoin is still young. It's still small. Like I said, billionaires, people with a lot of Bitcoin can change the price. That's not going to be the case forever. And after institutions have 1%, 2%, 3% in Bitcoin, it's going to start growing more like the average asset out there. 10%, maybe 5%, maybe 15%. They're going to be up years, down years, but it's going to perform more normally because there isn't this insane mismatch between the size of the asset and who's already invested in it and who's coming into the market. There's not going to be as much counterparty risk where one asset goes down or one exchange goes down, and then they have to fire sell a bunch of Bitcoin. No, it's going to become much larger and more distributed. A lot of people are going to hold it. A lot of people are going to understand it. A lot of people aren't going to understand, but are going to own it anyways. So right now we have this mismatch. And I think people misunderstand investing. At the end of the day, you want to make as much money as possible because honestly, the results in a lot of financial assets are similar. It's just a question of like how much work do you want to do? You can go buy the S&P 500, get 10% a year. You can go buy real estate. Maybe you get a good price, maybe you don't, but maybe that averages 10 to 15% a year. It's a little bit higher, but there's a higher amount of work. So it kind of makes sense. Like averages work out to be slightly better in real estate, but you're doing more work. If you have a business, okay, you can invest in the business. That's a whole different game, but you get a new job. So eventually Bitcoin will be in that mix. It will appreciate by 10% a year because everyone's got their set allocation. But at this point, people are racing in to buy that allocation, the allocation that makes sense. And of course, 50 years from now, people will be arguing about whether 1% or 2% allocation to Bitcoin is the right idea or 5%, but everyone will kind of be on the same page that it deserves an allocation. Right now, that's not the case. Not everyone understands it. Not everyone has access to it or has bought it yet. But again, that is changing very quickly. I hope you realize that. A lot of people got access to Bitcoin over the last 4 or 5 months. But still, it's just starting. We have pension funds. The big pension fund out of Wisconsin bought Bitcoin. How much did they buy? 0.1% of their portfolio. This is a start. It's a start. And this is just one of the first pensions to do this. Think about what happens when all those other entities start buying Bitcoin. Okay? That is when the price goes up massively. Then it'll probably fall down, and then it'll probably go up again and fall down. But eventually it will kind of even out to have similar returns and move up like a lot of other assets at that 10 to 15% a year mark. In which case, hopefully you got in early. Hopefully you were like me and probably like you are, right? Hopefully people get in early enough that they can take advantage of all those people coming into an asset because this doesn't happen very often. And I think Michael Saylor put this probably in a much shorter version and explained a lot better. If you want to buy an asset that everyone thinks is a really good asset, you're probably not going to get it undervalued. You're probably not going to get a really good deal on it. If you want a 100x asset, you have to buy something that people don't like or don't understand. Oftentimes those things go together. But you have to pick an asset that people don't understand and don't like, and you have to be right on it. So if everyone in the world likes Bitcoin, if everyone's allocating towards Bitcoin, and this has been happening long enough that everyone's gotten their target allocation, you're probably not going to get a deal on Bitcoin anymore. Then it'll be like every other asset, like in the stock market, where people are just looking for like deviations. People look for when something's undervalued because of negative sentiment, but really shouldn't be, and then they buy it and then it goes up. But you're looking at 30%, 50% gains. And there are always going to be outliers like Nvidia, like Tesla a couple of years ago, where people get in before a specific event or before a big change. But you're investing in companies. You're investing in businesses. And they're back and forth. This is a whole movement. This is a change. This is a whole asset class that has been undervalued since its inception. Let me know your thoughts on this underneath the video. Let me know if this made sense. Again, just kind of my thinking behind it. And I've seen other people talk about how when you're investing in real estate, you're basically just holding value in square footage. When you're investing in Bitcoin, you're holding value in Bitcoin. Just a question of how many people have access to it? How smart is the market? How difficult is it to get into the market? Let me know your thoughts. Again, you can check out the link to Margex underneath the video in case you want to trade crypto. I'll see you in the next one.